Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. I muted myself. Good morning, everybody. Well, we are getting some news come through here, so we should take care of that first. U.S. initial jobless claims lower than expected at 215K versus 225K. Well, that's good and that's bad, right? But the continued jobless claims continues to rise, so these people that have been out of work continue to have a hard time finding work. Morning Amir, A. Paul, Octavius. Let's come and see where we've been overnight. A rollover notification for oil. Let me change my DOM over here on my oil DOM. Let's see here. It should be June 2025 now, right? CLM. Yeah, okay. So, treasuries, a little bit of a rise. Well, so, oh man, I gotta go back. Camera. Yesterday, Jerome Powell spoke, and the market's very upset about it because he wasn't dovish at all. So, S&P 500 just totally, man, they took a pretty hard hit in the S&P 500. And interestingly enough, the treasuries moved up. They were initially down and then moved higher by the end of the day. And here we're kind of, well, a little bit of a retracement, but they're heading higher this morning as well. So this positive correlation between equities and treasuries has switched again, which is good, which is very, very good. But maybe also kind of suggesting that there's more pain in store for the S&P. Oil looking really good right there. Gold, whew. But I mean, that was mostly yesterday, right? Silver pulling back today. Copper also. Japanese yen. That's a pretty good little, like, subtle uptrend there. I like that. And Bitcoin just kind of shrugging along. So it does look like that the news that we got did boost them maybe slightly. We do have ECB press conference today. So I kind of feel like the market's maybe getting a little restless here. Motion Capital says good morning. Welcome. Tomorrow is Good Friday, isn't it? Oh, maybe not. At least it's not listed on my thing. I'm pretty sure that tomorrow is Good Friday, so maybe the market's not closed or anything, but that's one of those kind of weird holidays that's like a holiday but isn't. So you might see some people trying to position themselves today ahead of the weekend. And but then we've got an ECB press conference. So it was kind of an interesting situation where I feel like that the market might be a little bit restless, but may actually be a little bit more range bound just because they're going to be waiting. So we might get a range with a little bit more activity than usual. Okay. We do have a Fed speaker speaking at the moment. Who is it? Williams. He's saying time to collect data. I do kind of wonder if people are maybe misinterpreting Jerome Powell here. Like, that they think he should be cutting right now because Donald Trump wants him to cut right now. But really all he's saying is, I want more data. I don't know. We might be like reading too much into what he's saying. Yeah, it is Good Friday. It's just usually the Good Friday is listed on the calendar here. Maybe. No, it does list it. The NICE lists it. Okay, so I do think that you should get weekend flows today. From r/day trading, this person says, I went to the beach and it became very clear to me sitting out there today that every decision I've made the last few weeks has been wrong. Sounds like typical retail trading. I'm telling you, man, it's like, so if you understand that financial markets are not efficient and that it is the orders that move the markets, and you work on trying to predict the orders and combine all of the things that you might have to predict the orders, you get pretty good predictions, and at the very least, you will feel like you understand what's going on. Like, why did it do this? Why did it do that? If you just follow the price, I think that you're very often you're going to end up feeling like this guy on Reddit, where it's like you screw it up every time that it matters. Because the ones that are like really big, they move so fast, right? And then the ones that don't, it's moving because of some flow and not the thing that you think it is. And that's why you get them wrong. Well, I didn't finish eating breakfast, so I'm going to eat a little bit. Man, I'm seeing a lot of stuff on Reddit past day or two about Trump wanting Powell gone, wants a different Fed president. And people on Reddit are super, super uppity about this. Like, they really think that it's possible that he might somehow fire Powell or something. A-Ball says Reddit believes a lot of things too, though I would even say Reddit believes everything you've ever heard. Imagine if the Fed got doged. Well, like, the thing is that he's not saying I'm going to fire Powell, right? So the thing is that they are concocting this scenario in their head. In the Fed. Maybe someday another country, not the United States, please, can go and decide to not have a central bank and just let the interest rates in their country be subject to the market forces and see what happens. And because I guarantee you guys won't like it. Don't think you'll like what the market does. It's actually kind of interesting because it seems to me that the entire and the Fed kind of like idea is premised on the idea that the free market would deal with interest rates better than the Federal Reserve would. And I think that that's just absolute nonsense. Here's another one. What would happen if Jerome gets sacked as Fed chair? The market would throw an absolute fit. Listen, there's absolutely, let me tell you, zero chance it would happen. Okay, 0.01. There has to be like some chance of it. It's there. He's not going to fire him. He's going to wait until Powell's term ends, and then he's going to put somebody else in. Who would he put in? I don't know. It'd be funny You know, it'd be funny is if he picked somebody like Jamie Dimon, and then Jamie Dimon still doesn't do what Trump wants him to do. But the thing is that I really don't feel. I think that the Federal Reserve manages our money supply better than the free market would, better than the government would, but not nearly as well as we have the knowledge and capability to. Because there's all of this stuff like agent-based modeling and so forth. Like the Fed, they're doing a little bit of that, but there's not really a major push. They should really be pushing more in that direction. The Federal Reserve just doesn't seem to understand how their actions affect the market. They kind of view the market as like this independent system, and they're just reacting to this independent system, and they don't model out how their actions affect that system, right? And I think that the thing that makes like Jamie Dimon as Fed chair a compelling possibility is that you want somebody that has that experience of interacting with the market, essentially. And maybe he would make better decisions from that. But he probably still wouldn't always do what Donald Trump wants him to do. Because the reality is Donald Trump just wants interest rates low because he knows that markets do better when interest rates are low. And that's all he knows about it, I feel. There's also a lot of stuff on Reddit about that. What is Jeff Bezos's space company? Anyways, the flight they did with the female astronauts / tourists. Reddit seems to really, Blue Origin, there you go. Reddit seems to really love talking about that for some reason too. Like, I saw the story and everything, but I don't care. Am I just getting too old, guys? I feel more and more like the stuff that everybody is talking about on social media. I'm like, who gives a... Doesn't matter. Oh, wait. Good Friday is the third Friday of the month. Does that mean options expiration is today? I don't think so. Are those DOMs connected to NinjaTrader? No. What I'm doing is I am using Rhythmic Trader Pro, and then Rhythmic Trader Pro is forwarding the data to Jigsaw and to NinjaTrader. Ray SS says yes. I'm thinking about it. I'm like, do I believe Ray? Well, Ray's been around for a long time. He is a dedicated viewer. And I think we should trust him. Yeah. I think we should trust him. But, like, I feel like we gotta prove it if we're gonna say that. Because what if Ray just ends up being wrong? Hold on a second. Ray says that his options are expiring today, at least. Yeah, Fidelity says all major U.S. stock markets will be closed Friday, April 18th in observance of Good Friday. But when I come in here to the options, $17.25. Today is the 17th, next week is the 25th. Okay, so today is options expiration. Octavia says the weeklies that expire don't have very much open interest. Really? If tariffs are so great, why pause them? They're not so great. They're definitely not. You know what this is, right? This is neuro. This is one of those things that neurotypical brain isn't. Well, actually, I would think that autistic brains would be really bad at it too. LaGuardia is speaking right now, by the way. I'm not going to. Well, I don't know. Maybe we should we pull her up? I don't know. I'm sitting here like I really don't like listening to the press conference. But then there is that one reporter that's really good looking. If they aren't, well, because something doesn't have to be all good and all bad, right? There can be mixed impacts to multiple different things. So one of the issues that an autistic mind has is because they're not able to take advantage of that kind of executive functioning, fuzzy neural network sort of a thing. They tend to think in absolutes. Like something has to either be all good or all evil, all positive for the economy or all bad for the economy. And they can't necessarily conceptualize that something might have good impacts on some parts of the economy and bad impacts on other parts of the economy. But it seems to me that the neurotypical brain is having a hard time dealing with that as well. But I think in this instance, it's because the neurotypical brain avoids complexity. So it's not that it can't understand that something can be half this or half that. It's that it doesn't want to go into the detail of trying to understand how it affects all of these different things. It's really because we got kind of like two major thinking systems in our mind, like system 1 and system 2. The intuitive system and the logical system. And in trading, there are some things that you need to do in trading that require system 1. And there are some things that you have to do in trading that require system 2. And so to really be a super effective trader, I think that you kind of need to have both. But then there is another set of things that just no human brain is very good at. And that we have to understand when those are and know when to rely on tools as well. Right? Because the human brain is really, really bad at dealing with complexity. Having to do like a deep logical following what somebody's going to do and then doing that millions of times, we can't do that. No, Octavius. I'm saying that the monthlies. Okay, wait. I'm saying that the monthlies are supposed to expire today, aren't they? Probably most of the volume has already switched to the weeklies for next week. And maybe a lot of the monthly volume too. But I'm pretty sure, after looking at my fidelity and looking at the expirations and stuff on MSTR options, that the monthly expiration is today. Okay, let's see. It doesn't take a market wizard to see indices declining. Okay, but sure, indices have declined. But what does that actually mean? See, because the way that you phrase that seems to imply that the index has declined, ergo, tariffs are bad. But that's not what that means. Indexes are down, ergo, the things that have happened in the last 3 weeks have caused people to sell. And that's all it means. And it doesn't tell us anything fundamental about the state of the economy or the future. And it doesn't necessarily tell us that tariffs are good or bad either. Although if I'm Donald Trump, I certainly need to realize by this point that the tariffs are kind of inducing people to sell, at least in this situation and circumstances and so forth, and that does hurt the economy, and that kind of affects his negotiating position and so forth, doesn't it? This should result in money moving to bonds, but it isn't. Well, so I'm not sure that we can say that for sure. Maybe we can. Let's see. Well, you can't just say that because the bond prices are lower that there isn't money moving into bonds, right? It's a little bit more complicated than that. Oh, actually, you know what? We should do it this way. We should just go new chart. ZN. Make a daily chart. Because the whole thing is that there was a big buy and then there was a big sell, and now we're kind of a little bit higher. So like, was there actually net buying of treasuries or not? I don't know. But we have, what is it called? What's the indicator called? COT? There we go. Number of COTs. And then let's just say total long. And total short. And total net. See what that does. Oh yeah, sorry, I'm muted. Okay, so when you come in, you look at this COT report and you look at the total longs and the total shorts. It does look like maybe shorts increased a slight amount, but we don't get the data until a week later. So I don't know if we get it today because it's because of Good Friday or if they still release it tomorrow. But tomorrow we should maybe get a better idea to see if, at least in the futures, and that's the other thing, is we're like, we can only see the futures and not necessarily the cash bonds. We can see if there was a significant change in positioning. I think something that we can say for sure that people have left the dollar, that there's a lot of money that moved over to Europe. That's certainly true. Although I think that that has a little bit more to do with like that the United States is essentially engaging in contractionary policies and Europe is about to open the spigots. And not necessarily just due to tariffs. There are other futures you could trade. Why ZN? Why not ZN? Name a better futures instrument than ZN. Here's the thing. ZN futures, extremely liquid. More regular signals because it's so liquid. Highly economically sensitive. It's just, I really feel like you get the best of all worlds with ZN. You have a much better opportunity to build an edge in ZN compared to other instruments, man. Because like, I think that the biggest alternatives would be things like oil or gold. Oil is really hard market to understand. There's just a lot to know there, and it's not really very public information. So unless I like worked at an oil company, I think it would be hard to develop the kind of edge that you can develop in the treasuries. Same with most of the other hard commodities. Maybe corn. Maybe corn would be a little bit better because there's going to be a little bit more public information about how farming corn works. And then, of course, there's the equity indexes. But most of what happens in the equity indexes is just random. Why am I pointing over here? That's the end. I didn't turn the thing on. I didn't turn. Let's fix that. I partly feel like it's the first bigger sell-off that many people have seen in a long time. So this is definitely like one of the biggest sell-offs that we've seen since COVID. Like when you put it in those kinds of terms, it's good. You kind of realize how crazy it really actually is, right? Like, let's do some gaming things out here. So we've reached a 20% retracement at one point. Set start white to 0. %20 decline for that one is way further back. So now if I change it to this one, okay, so it definitely is. I was gonna say there were some declines that we've had, like especially the 2022. Oh, you know what? This doesn't even go back anywhere even remotely close to far enough. Yeah, let's try that one. Okay. So it's about equal to the drawdown that we had in 2022, but of course, much, much faster. Okay. And there has been many, many such 20% declines that I can think of. So for all of the people that started trading in after COVID, which is like most retail traders now, this is like the craziest thing that they've seen. And it is kind of curious that, everybody's freaking out when this is really, by historical standards, a standard pullback. From that perspective, that kind of makes me think, well, the markets could go so much lower, like again, I think this is the thing that's funny is I'm going to argue against myself. Here's the argument that you should have made, right? Well, markets aren't informationally efficient. Yeah. If they were informationally efficient, we would be much lower than we are now. That's the funny thing. But maybe the market thinks that Donald Trump is going to get something done. I don't know. We'll see. So I'm seeing a little bit of dancing around on the DOM here. Like, you're not seeing price move too much. Oh, I take that back. They were up at 13. I'm getting headlines from some financial watchdogs kind of questioning whether the Treasury is really a safe haven right now. And I think that headline is affecting the Treasury market here. I don't know if it's really enough for us to take a trade, because like the amount of volume that I'm seeing from it is pretty minimal. But I'm definitely seeing the DOM react to it, all these little changes. So it is definitely giving us a sign of some sort of regime change happening here. Okay, so my market order imbalance indicator is not adding because there's a bug. It's giving me an error here. So I'm trying to figure out what it is. It's saying object not set to an instance of an object. Which I was kind of curious because all I did was add this imbalance, this extra imbalance long thing, and the news. Like, if I comment those three out and try now, does that fix it? Oh, Ferre asks cursor. No, I think I can do it faster than cursor. Okay, didn't like that. Interesting. Okay, so it is the news thing. See that? See how good I am? We spent about $500 million firing. Why are you bringing that up? We haven't taken out their missile launch, but they don't have missile launch sites. They are like firing them by hand, right? $500 million. We have another $500 million to send, is what I hear. Wonder, that's a big imbalance. So I'm wondering here. So we added this second imbalance to be possibly a filter. So I'm thinking only go long if it's above 50, right? And in this case, it would have taken this one. I don't know if it would, let's see, it was 630. In this case, oh, interesting. In this case, it might have gone short over here. But the historical replay is not showing that it did, so. It's funny discovering what, oh yeah, well, I mean, I remember putting this on a year ago as well, right? It's just I wasn't watching it as closely as like how the algorithm is going to react to it, you know? I kind of suspect. Oh, I won't credit you with the idea. I don't think, were you the first one to bring it up? Because when I first started doing it, I was definitely doing something different, right? I was trying to do it on like a 1 second chart. And I was trying to use it as a contrary signal. I gave you a lecture about technical analysis. Well, I do kind of suspect that what we're doing is overfitting it. Like, not overfitting it. Like, I don't think ultimately that this simple version of it will be net profitable. I think that I can predict when it will be net profitable and when it won't, though. And I want to take it, and I guess the advantage of streaming so much as is that pulling the exact video of it is pretty difficult. But I mean, we have seen, especially this week, right, the problems with it. So in order to get in early enough, you have to be looking for a deviation that's really, really small. And then because of that, you get a lot of signals, and those signals aren't as good. Maybe there's enough there. You didn't find it much different from looking at the delta? Well, yeah, from the perspective of a discretionary trader, you can probably see the same thing from delta. That's true. Like, the advantage of it is that it is easier to create an actual threshold setup for an algo. That's really all it's about. Yeah. But that again, so one of the things that I'm wondering about, I did add, which one was it? This simple imbalance reversal, was it? No, I didn't add it on that one. Imbalance pyramid? Maybe I didn't. Maybe I didn't. I thought that I added an R² filter on it. Maybe I did, and it didn't work, didn't make things better, and I took it back out. That must be the case. So the issue with the R² filter on it is that if I say, I want it to take early still, then I have to say, R² is below, right? Basically, I don't know how to represent this, even as a graph. Well, I guess I can do this. Hold on. So if this is a number line of R², right? Which parts of it do I trade? I want to get in early. So what probably I want to get this. And not this. Right? But the problem is not that it's taking the trades too late or something like that. The problem is that it's getting faked out. So if you put R2 to say there needs to be more R2 in order to take a trade, then you're taking this one, and then you're not getting in early enough, right? So R squared does not end up filtering the way that we need. So what would be a better filter? Haven't had any ideas yet. Other than take all of my level 2 indicators in there and send it into machine learning and have the machine learning determine when it's a good time and when it's not. But now this thing is not about this the R squared on a 30-minute. Oh no, wait, hold on a second. That's something. Hold on. They look practically the same. How can that be? Period long is 30. It's kind of weird that we get those big spikes like that. Guard says we did not discuss stimulation. Is what my new squawk just said. Is that the way that she said it? But anyways, you know, when it's doing these things, and it's getting like these different signals. I don't want it. I could maybe use that as an exit, but when it tries to take the opposite, you know, you get the issue of it taking a cross trend trade. So that's what that's about. I don't know if that'll make a difference, but I kind of want to watch it for a few days first before I even try. So if I just go in and I back test it, I'm probably going to find that it reduces the number of trades, and then I won't understand much about it. So something I did notice that I also have been noticing with it is that, like yesterday, it did a similar thing to what it did the day before, which is like it did pretty poorly through the beginning part of the session, and then it caught 2 really good trades at the end. And but by the end, it was still net loser day. But when I looked at it and the number of trades that it took, it was basically an average -1 tick per trade. So it was actually like, hey, if you're able to get limit orders on both sides, it would actually be working. We'll filter it with a Reggie timing. What is a regime timing indicator? Like stochastic? I don't understand what you mean by that. Let's see. How is stochastic a regime? Oh, a regular timing indicator. Yeah, no, I'm not sure I understand how why you're calling stochastics a timing indicator. Let's see here. Let's just go with the default. Anything that tries to predict overbought and oversold is a timing indicator because it encourages you to take counter trend signals. Timing in the sense that you have a very small window to enter. Okay, I think I understand what you're saying, but let me start over, okay? I think that to make this strategy really super effective, that I have to have a way of differentiating between regimes when a large meta order is present and regimes when they are not. It works really well when large meta orders, and that doesn't necessarily mean being executed by one person. It could be a bunch of people trading off of a certain thing, okay? But when there's a large meta order present, that's when they're going to push price and market orders are going to be dominant. And when it's not, you want to take the opposite of the signal, right? Basically, as far as I've found, that's the other thing that I thought it was weird is that when it's been doing poorly, it's been like almost the exact opposite signal. I wouldn't think that it would be that
order
clear.
Canceled.
But it was really like you wanted to do the exact opposite, right? So I need a filter. I think that like this market order imbalance is giving me so like one way you can think of it as is how do I decide when to trade and how do I decide what direction to trade, right? And the market order imbalance does both of those. It gives me a specific bar to trade on, and it gives me a direction to trade off of, right? But I need another filter that is good at saying this is when it's going to work well and when it's not, that will filter out the bad trades and keep the good trades, essentially, right? Daily open and close. How would you do it based on daily open and close? So theoretically speaking, I think that the best filter for it would be have your predictors of order flow, and if you have a large meta order or an expected imbalance, and then you trade it. Right? Oh, up day, look to buy, down, and yeah. Well, you could use that as a filter. Yeah. The reason why I was confused wasn't because I didn't see how what you were saying was a filter, but I didn't see how that would filter it in the way that we want, right? My guess is that if you use that as a filter, that it probably doesn't improve the probabilities, right? But try it, I guess. But here stochastics doesn't really help me because I don't need timing. Yeah, you just I gotcha. I mean that one's worth thinking about. I do think that we would probably see some interesting behavior potentially. So let's see here. What was filtered? What? Filtered market order imbalance. Wait. Now, what? Did I close the editor window? Silly me. Filtered market order imbalance. Oh, here it is. I did do a filtered market order imbalance and filtered it based on R squared. Cross above, cross below, etc., etc. What do I call it? Start time? Okay, hold on. Get rid of that. Deviation trigger is 3. Run it until today. Okay. Very good. Okay. So wait, it was better with the R squared, was it? Okay. It's only taking it when R squared is low. Okay, well, how come I'm remembering that wrong? I remembered that as being no good and giving up on it. Maybe it was just because it didn't take enough trades. That's weird. But okay. Let's just come back and try a couple of other things. We have the results of that saved in the history. And close of 0 is greater than today open. Close of 0 less than today open. Oops, underscore today open. I would not expect this filter I mean, you might see in the data, it might, because we don't have a ton of data, might see a difference, but I wouldn't expect it to be super effective. But let's see. Okay, yeah, that's pretty bad. How is that? Actually, how is it that bad? Well, so first of all, it doesn't change this. Yeah, so do you see, like, what it does is that filter makes it take less trades, but it basically doesn't really change the win rate. So, like, what I would really be looking for is the percent profitable to increase, and it did not. Oh, we must have like just been doing it and didn't finish. Because it really seems like that the filtered one is better. Well, what if you tell it to only do counter trades? That might be like really bad, but let's see. Oh yeah, it's terrible. Percent win rate went all the way down to 41. That's really kind of odd. So this right here, 46% is like our baseline, right? And by only trading above, it does increase our percent profitable. But then we also end up missing some of the best trades, apparently. So it is ultimately, well, the stats probably do say that it's better to go long above the open and short below the open. On a risk-adjusted basis, it doesn't work out, right? The R squared does, though, which is so curious to me. Kind of suspicious results, actually. I don't like that it just doesn't take us. How many trades per day is it taking now? 2. Well, that's kind of more like what we would like, though. Oh, this won't work. This won't work anyways. Won't work because we haven't collected the data from it long enough. I do feel like I have learned something over the past week or two about R squared though, right? Like, the reason that R squared can be such an effective signal is because it helps you get in relation to how long a move has been going on, right? Like if you're waiting for R squared to be low, then that's going to be the beginning of a move. So you can get more MFE that way, essentially. I'm going to close these. Yeah, no, don't save that. I added another Xeon chart, didn't I? Oh, I might have closed that too. I'm going to check one more thing. It's doing pretty good on this long, by the way. Yeah, adaptive CCI doesn't seem to be a good filter either. It's not in that situation. You know what? I will edit. that way I'm saving the cumulative delta. And then we can go back and we can look at if R squared of cumulative delta and or correlation between cumulative delta and price end up being good filters. I kind of suspect, I would think that correlation between cumulative delta and price would be a somewhat effective filter. I don't think it would completely solve the problems, but we'll try that tomorrow. I'm thinking back on what Uzi was saying, like, oh, well, you're just doing what I was doing a year ago or whatever. Like, did we not create like, why didn't I make an algorithm on that like that earlier? So, like, why was I focused on the 1 minute or the like 1 second instead of the 1 minute? I don't remember what I was doing at the time. Because I don't think that it was that, I didn't think that it was a good algorithm as much as it was that I probably thought that there was other things that were more worth my time. Yeah, you were still kind of beta testing it? Oh, but we've had the market order imbalance for more than a year. Had it for a while now. Now, some of these things, like the cumulative delta, that one's fairly recent, right? So... the way you use it, you could figure out a effective way to use it, and then you dedicate hours telling us that it is how worthless it is. No, all I'm really concerned about people trying to misuse it, right? Like if I come out and I tell you, oh, market order imbalance, just buy when it goes above 53 and sell when it goes below 47. That's not, from our testing, an explicitly good strategy.
Order submitted.
When we're in a very active market, it is. And so I'm spending all this time trying to explain to people the caveats so that they don't misuse it, right? I don't know. I probably spend just too much time expanding on them anyways. This cell that we just got here is interesting because I wasn't hearing anything over the news squawk. By the way, I didn't ask you guys, what do you think about the leaving the stream going? So it looks like it all worked correctly yesterday. I didn't come until like 15 minutes later to end the stream at the correctly, but it did stop streaming at the right time. Not very many people stuck around for it, though. One thing that I should do, we're doing this again, is because I could see that it had taken trades, but I couldn't see, how it had actually done overall. Paul says it was all good. They're almost to the buyer's stop out zone. I don't know though. With it, an impulse like that in that spot. Is it really the buyer's stop outline? Maybe it is a bounce. I am a little bit weary about this one and the way that the algo is trading it, simply because it looks like a news-driven event and I'm not hearing anything. Holiday Chop Fest. I am kind of getting... Okay, now, you know what was something that I think was really interesting about today, though, that we haven't seen? Is that this buy did get all the way up to a 60% imbalance, and that's when it stopped. So remember, I had this idea that's like, maybe you go long when it's 53, but you exit when it's at 60. And that didn't work. Let's see here. ZN at the buyer's line. ZF just went above with a little room. So maybe when ZF kisses the buyer's line, then all four will buy, which would probably have ZN kiss the seller's line. See, ZN going to 08-ish would make sense. Except for that, that's the bottom edge of the regular session range. So I don't know. Does kind of look to me, too, by the way, that if we had this going, that it would have gotten made a little bit on this one. So I think I did. Man, I'm still like trying to I'm still questioning past Seth, because I thought that the R squared did not work. And now I'm going back and I'm looking at it and looking at the strategy analyzer log and everything, and it was working. I must have said, oh, it does work, but let's not add it yet, because then it won't collect as much data. Also, I'm a little bit weirded out by that the market order imbalance on a 30-minute doesn't really look all that different. What is market order imbalance? It's the same as sitting bid-ask or a volume delta. Yeah, well, kind of think of it as like a rolling delta. So it's and take a rolling delta and turn it into a percentage. So it's the percentage of buy orders in the last end period. In the last 10 minutes in this case. Now, see, there's one, like Octavius is saying there's only one MBO market order. He puts up 300s to 400s, and the 1,000 lots guys are still gone, right? So that is something that I think could be a good filter for this, right? There's not a lot of big MBO orders out there. The big guys aren't playing, and ergo, I shouldn't expect those big imbalances. That would be a good filter. Or one that I would like to try, right? Well, anyways. Is it part of the... No. Because I don't have... NinjaTrader doesn't support MBO. Unfortunately. You could certainly do it discretionarily, though, right? It's going to be funny if this completely retraces and that ends up being a bad trade, but we're going to let it go. You know, there could still be some drama today, so. But I think that I should get going. So let's see here. I need to change it to no camera, mute myself, and set the timer.
Order canceled. Order canceled.